Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 1st, beginning of the new month, and wow, the holidays are going to be right around the corner here before we know it. Hey, we got a couple economic news over today, so we'll start off with the weekly jobless claims. Remember, the big one tomorrow will be the non-farm payrolls that the Bureau of Labor Statistics will release tomorrow. So that will be the big one. But this is kind of our prelude, one of our prelude data, which is the weekly jobless claims. So last week we had 267,000 people apply for unemployment. The forecast was supposed to go up a little bit to 271, and it went up 10,000 to 277,000 people applying for unemployment. Manufacturing numbers, we got market PMI. The final number came in for September. It went up slightly from 53 to 53.1. That's good news. ISM, however, pulled back a lot more than we expected. Starting off at 51.1, the forecast was supposed to go to 50.6 and went further back to 50.2. So that's not so good. Manufacturing dipped a bit more. We also got construction spending heated up a little bit more in August, so that was good news. That we're spending more work on infrastructure at 0.4% back in July. The forecast for August is supposed to go up to 0.6, and we even exceeded that 0.7%. The market is currently down. The Dow is actually, after a nice little rally yesterday, even though the quarter for the stock market was actually down the first time in like 4 years. The stock market's down. The Dow is down over 100 so far this morning. It actually started off nicely. It was actually up a little bit before the data came out, the domestic data came out, because the Chinese manufacturing, they had some factories, good data that came out, so positive news that came out of China. But when we got the domestic, it kind of went downhill from there. Also today, there were some comments made by Fed member Lacker. He was one of the dissenters. He might be, I think, actually the lone dissenter in last month's poll, based on that interest rate hike is still on the table for a month of October. So it's possible they could raise rates in October, but the big thing will be the jobs numbers tomorrow. So if they think it will be a good jobs numbers tomorrow, good chances will increase of a possible rate hike in October versus waiting till December. And they're projecting anywhere between maybe an 8 to maybe even a 0.25% are the what they're factoring in there. Let's also comment about yesterday. I mentioned that Russia had put some airstrikes into Syria. It's not seeming to be affecting the financial markets at this time, but keep an eye on that primarily because it's going to wait to be seen what the U.S. and its allies from France and England, what they're going to do. So how they may respond to the airstrikes, as it appears that Russia is kind of helping out the King Bashar al-Assad and going against the coalition that the U.S. and French and British have been helping out. The anti-Bashar and anti-ISIS group versus going after the ISIL group. So keep an eye on that. That could be a factor as a geopolitical that could move markets later on, but right now it doesn't seem to be phasing the markets. Let's take a look here at the bond market, and currently bond market's up about 12 basis points from where we left off. Be very cautious here. We are in kind of higher territory now. We are. It's been about 3. We opened and we're staying above the 200-day moving average, and as you can see, it's graduating upwards. So we got a nice upward trend here. But I urge you to be cautious for tomorrow's job numbers. We got to be careful of what we see for tomorrow, because if it comes in high, we could lose this very quickly as well. All right, folks, but today enjoy the nice improvement in the interest rates today. All right, have a wonderful day. Thanks so much for watching, and let's be prepared for tomorrow, the big number coming in. Talk to you later. Bye-bye.